you are required to pass journal entries in the books of Mahesh. All right, we have been given different transactions, and we have the format already in place in order to pass these entries. Now, the first thing that we do is we write journal entries in the books of Mahesh, or alternatively in the books of Mahesh journal entries. Okay, however you want to do. What's more important is how you make these entries. Notice, even though the format for a journal has dates, we don't have dates. In the absence of date in the date column, you can go ahead and put the serial number. Right, so I'm starting with the first transaction, and that is going to be transaction 1. Right, and going back up, we have a check amounting 24,000 from Shankar in full settlement of his account for 25,000. Now, if we are talking about a check amounting to 24,000, the moment we have check, understand that the bank account is involved. Apart from that, we have Shankar, so no problem, Shankar as it is. In full settlement, the moment you see full settlement, and keep in mind, we are getting a check amounting to 24,000 from Shankar. Okay, that means Shankar is paying us. Shankar is our customer, and he was supposed to pay us 25,000, and yet you have a situation where only 24,000 is being paid. So your uh, account involved in such a case is going to be a discount account, since you are the um, supplier, okay, of a good or service to Shankar. He's paying you a lesser amount in full settlement. The difference is going to be discount allowed. Okay, so the three entries that we have is bank. Again, it'll be bank account, debit, discount allowed, discount allowed. Okay, and this is just rough debit. Okay, and we credit Shankar. All right, and always try and remember in terms of the golden rules. So debit what comes in, debit all expenses and losses, credit the giver. And now that I have all the numbers in place, I'm in a position to pass the full journal entry. Okay, and I'm going to go to do that downstairs. Okay, so I am going to be saying bank, bank account, debit, discount allowed, debit to Shankar's, okay, to Shankar's account. Okay, and I'm going back up to look at the numbers. We are crediting his account by 25,000. We are receiving 24,000. So let me fill up those numbers. I'm receiving a check of 24,000 in full settlement of his account to the tune of 25,000. And therefore the difference is going to be 1,000, which is the discount allowed. Right, and we should have a narration, of course. All right, so being check received from Shankar, from Shankar, and discount allowed. Okay, the most important part is the journal entry. Narration should be a short summary of the transactions. Please that. Okay, now that I'm done with this transaction, what should be done is, of course, you'll have to use a scale, obviously, pencil and scale, but I am drawing a horizontal line marking the end of this transaction. Now, going back upstairs, withdrawn for personal use. The moment you hear personal use, and the moment you see personal use, what you have to think about, what you have to think about is drawings. Okay, withdrawn for personal use, goods, and we never use the word goods account in a journal entry. Okay, remember, goods is either going to be purchase account, purchase return account, sales return account. When we are withdrawing goods from our own business for personal use, when you bought those goods, you debited the purchase account. And when you take it out for personal use, you will credit the purchase account and always on cost. So this 6,000 is going to be is going to be purchase is going to be the purchase account. All right. And apart from that, we've got cash. So we've got three accounts: drawings, purchase, and cash. And I'm going to go straight downstairs and put them in place first. Okay. We have transaction two. And keep in mind what's happening. The owner is taking out goods in cash. So we debit the receiver. Drawings, drawings, account, debit. What is going out? Cash, credit what goes out, and goods for which we're crediting the purchase account. Purchase account. Okay, so cash account, purchase account. Going back up, the cash is for 3,000, goods are for 6,000. Okay, so I'm just going to put corresponding to cash and purchase 3,000 on the credit side. Credit what goes out. So 3,000 and 6,000. Total drawings will then be 9,000. Right. And again, a short summary: being goods and cash withdrawn for personal use, being goods and cash withdrawn for personal use. Okay, going back upstairs, we have goods costing 3,000, sale price 4,000, distributed as free samples. Okay, so whenever we have free samples, okay, that itself can be the name of your account. Okay, alternatively, you can think of advertising, all right? That wouldn't be wrong either. Okay, and let's see what else can we think about. Sales promotion. Okay, sales promotion. Either way, it means the same thing. All right, whether we talk about free samples or advertising or sales promotion, all of these are forms of expense. And again, goods are going out. All right, and remember, whether it is for drawings, okay, or whether it is for sales promotion, whenever goods are going out of the business for any other reason apart from purchase return or sales, we always credit the purchase account. Okay, so I'm going back down and I will pass the entry. Always remember it has to be at cost. Okay, so we will think of 3,000 and I will stick to free samples account. All right. So first of all, I draw a line. Okay, and yes, you all have to use scale. Now we have free samples, free samples account, debit to purchase, to purchase account. Okay, and I'm just going back up again to confirm the amount. Okay, always at cost and therefore 3,000. Okay, so free samples account debit 3,000, debit all expenses and losses. To purchase account 3,000, credit what goes out, being goods distributed as free samples. Distributed as free. Okay, and the reason I'm painstakingly writing down the narrations is because in the exams you have to do it. Okay, you will unnecessarily lose marks by not doing it. Right? Have a habit whenever you're passing the entry. I know it's very tempting to just avoid and move on. Again, I've had students in the past using all sorts of hilarious shortcuts while trying to pass journal entries, putting narration as being entry passed. Okay, don't do like that. It should be a summary based on the transaction. Okay, we have next received commission. Received commission. Okay, 15,000, half of which does not relate to the current year and is received in advance. Okay, and first of all, if we are receiving commission, they're not telling us how we have received the commission. It would either be cash or bank. Again, remember, we are in an era post demonetization. So let us assume that whenever we are receiving anything, it is going to be for in a bank account unless told otherwise. Okay, so we have bank account for the money received. Okay, and it is towards commission. And if it was for the current year, it would have simply been bank account debit to commission received, debit what comes in, credit all incomes and gains, and that is the end of the story. But because because uh, part of it is in advance, right? We can do a combined entry where we debit the bank account. Okay, and let's see, do we have space? Yes, I'll have to extend going forward, but for now, okay, we will debit the bank account. So bank account debit to commission account to commission commission account, and then you can credit to prepaid commission. Okay, now prepaid commission account is a liability account. Okay, and in a way, we debit what comes in, we credit all incomes and gains. Okay, and we credit the receiver in a way where the liability account denotes something that we are still liable to our client for. All right, now we have 15,000 received and it's half and half. So I can just say 15,000 and 7,500 prepaid commission account 7,500 being commission received. Okay, and let's see. I mean, when you're thinking of narration, uh, we can, instead of saying being commission received, it could be being commission and advance commission. Okay, advance commission received. Okay, that should do. Now, if you look at the RTP solution, they have two separate entries for this. Not necessary. This should be good enough. Correct. I am going back up, and we have two more entries. I'm going to have to make space for them, right? And let's see. We have income tax liability of proprietor 8,500 was paid out of petty cash. Now, whenever it is to do with the proprietor, remember income tax liability for a proprietor is the proprietor's problem, not the business's problem. The proprietor, if the proprietor uses cash from the business, it is going to count as drawings. Simple as that. Okay, so if it's paid out of the petty cash, then we will have to pass an entry using the petty cash account rather than normal cash account. All right, so going down, we have drawings account. Okay, and again, we draw a straight line. Please use pencil and scale, draw a straight line. Okay, marking the end of the previous transaction. Okay, and this is transaction 5. This is transaction 5, and we have drawings account debit, drawings account debit, okay, to petty cash account, to petty cash account. So am I using petty cash account? Because they're saying they use petty cash. So we'll also use that account, 18,500. Okay, and going back down, I will place 18,500 both on the debit side as well as the credit side. Okay, and the narration here, okay, being proprietors, being proprietors tax. Okay, and if you want to be specific, you can say income tax. Income tax paid from petty cash. Okay, next we have one last entry. Okay, and again, I'm doing this. Okay, this is entry 6 and going back up. Purchase of goods from Sunny, list price 15,000, allowed a 10% trade discount. 200 cash discount was also allowed for quick payment. Okay, and now we have to do the calculation, and keep in mind, if the list price, okay, and I'm going to do the working over here. If the list price is 15,000 and we have a discount trade discount at a rate of 10% means 1,500. So the amount that you're going to debit to the purchase account is going to be the difference, okay, which is going to be 13,500. Then they're saying that 200% cash discount, okay, and this time we are making the payment, we're getting a discount, so it's going to be discount received. The account that you're going to be using is discount received. Okay, I'm just using short form. We'll use full form in the journal entry. How much? 200. Okay, so if you are buying something effectively for 13,500 and you're getting a cash discount of 200, how much are you paying? How much will be credited to the bank account? It's going to be the difference, which is 13,500 minus 200, 13,300. Okay, so now I have my three accounts. Okay, it's going to be uh, debit what comes in, credit what goes out, and credit on incomes and gains. All right, so it's going to be purchase account debit to bank account to discount received. Okay, purchase account, purchase account debit to bank account to bank account to discount received account to discount received account. Okay, and I'm going back up just to look at the numbers. All right, and we have 13.5, 13.3, and 200. So 13.5, 13,300, and 200. Okay, and notice how we do not mention the supplier's name. And the reason for that is because we are paying him. Only when it is a credit transaction does the supplier's name come up in the journal entry as one of the accounts. But we can mention in the narration that we purchase goods from Sunny, okay, with 10% trade discount and cash discount of 200. Okay, so being goods purchased from Sunny rupees 15,000 with trade discount with trade discount at 10%. And again, I'm really squeezing it in cash discount. Okay, please make space when you do it. Cash discount rupees 200. Okay, and with that, we are done with the journal entries. I hope this has been helpful. In case you have any doubts, feel free to mention in the comments. And of course, please like, share, and subscribe. Thank you. Okay, I hope this is helpful.